Hello everyone, welcome to the Ichimoku.co and Forex Trading TV Daily FX Market Review for the trading day ending Wednesday, September 10th. Well, firstly to the Euro US dollar, and here we see congestion bound between the 129.79 level of resistance and the 128.71 level of support. This market has been moving often in a step-like process: downtrending price action, congestion area, downtrending price action, finding support, a small congestion area, strong downtrending price action, congestion, and it's likely, in line with the market being bearish in all three timeframes, trading below each of the Ichimoku indicators, that the next move will be to the downside. But we will need to see the market clear the 128.71 level of support, and if we do that, a good likelihood of the market trading down to 127.45. If the market does rally, and there still is a possibility of that occurring, because looking at the depth of the price action away from the Ichimoku cloud, it does look a little overextended, and also the extent of the tick span away from the price action looking just a little overextended. And if we do see a rally, the market will need to trade through 129.79 and then trade through the Tenkan-sen, trading at 130.09. The Tenkan-sen should offer itself as very solid resistance if the market does trade to there. You can see how for quite a few occasions in the past 2 months the Tenkan-sen has been holding a strong resistance to this market. Any significant breakout to the upside above that resistance at the Tenkan-sen would herald a very significant change in sentiment for the market, but at the moment we're not seeing that happen. And for today's candle that has completed trading, we've seen a change of trend. So we've got a candle with a higher high and a higher low, but the trend has changed on a spinning top, indecisive type candle, and the market tested roughly to the 129.79 area, and we've seen some rejection from there, but by the same token, rejection from 128.71 on a small body candle. So quite some indecision in this market. And for the past 3 out of 4 trading days, we've had roughly small body candles and a lack of strength from the buyers. So the buyers certainly aren't showing any commitment to trading this market higher. So that, in line with the market being bearish in all three time frames, suggests that the most probable move will be to the downside. And as I've said, a lot depends on the market clearing this 128.71 level below. Now, just looking at the Fibonacci extension, or the Fibonacci projection, and here, if you recall, yesterday we were watching how the market interacted with the 261.8% level. We had the buyers coming into the market, so a switch from the sellers being in control to the buyers being in control, some upside momentum. We were looking for the market to make a higher high and a higher low. That change of trend in the first time frame has been confirmed today, with the market making that higher high and higher low, but on a weak indecisive spinning top type candle. So there is some doubt about whether the market will have the upside momentum to go on with the move. Now, just quickly looking at the Fibonacci retracement of this first time frame downtrend, and here on this upswing we've seen the market interact roughly with the 23.6% level, almost to the 38.2% level, and be rejected from there on this indecisive spinning top type candle. It does suggest that there is potential for a change of trend back to the downside. Now, just watching our bands here, and the bands are very wide, reflecting the strong volatility that we have in the market at the moment, and that's as a consequence of this very strong downtrending price action, the market breaking out down here from below the bottom band following the squeeze, and now we have very wide bands, and often when we have the wide bands we see the market attempt to mean revert. The attempt that we saw today was rather mild on an indecisive spinning top candle. It doesn't give us any confidence in the market retracing back towards, or regressing back towards, the middle of the bands. This market will need to be strong enough to break into the bands above the resistance expected at the 129.79 level, which is the bottom of the bands. And we've seen in the recent past how the bands can act as an area of support or resistance, and failing the bottom band, the upper band at 130, 134, but it is a fair distance away from price action at the moment.